Hey guys, welcome back. Joe here from 9 to 5ers, and we're going to be talking about something that's not fun to talk about, but we need to talk about it either way. And that is the fact that you are going to die at some point, and you might want to have some insurance in place for your loved ones when you expire. The two basic types of insurance policies that are out there are whole life and term insurance. And we're going to be explaining each one of them, and we're going to be doing a pros and cons list of each. And then at the end, we're going to try to figure out maybe what's the best one for you based on the information provided. So without further ado, let's jump into the overview here. Why get insurance in the first place? Should you even get insurance? Do you need it? What should I expect when looking at my policies? Excuse me. Term life, we're going to review that. We're going to review whole life policy. We're going to compare the two, and then we're going to figure out which one is right for you, if any. Why get life insurance? Well, someone depends on your income. Do you have kids? Do you have a spouse? Do you live alone in the woods and live off the land? Okay, well, most of us don't, and we have loved ones that depend on our income. Maybe you have debts to pay off. Maybe you have a mortgage, and if you died, it would be nice if your house got paid off and your spouse got to live in a house that's paid off while they grieve for you. Hardship period for loved ones. That is the time between your passing and they can actually move on to a certain extent with their lives. Nobody wants to have the loved one of their life pass away and then immediately go into let's look at finances and bill paying and debts and hardship and all that. You're adding just bad things one after another. Funeral expenses. Funeral expenses are pricey, and it seems like they are only going up. So you could have money set aside for that. And you actually care about people that you will leave behind. And the reason why I put that in there, it's kind of tongue in cheek, but it's kind of not, because I've talked to people about insurance before and they're just like, I don't care. I'll be dead. Who cares? And I'm just like, well, don't you have anybody that, you want to leave some money to behind or whatever? They're like, I'll be dead. I don't care. Just put me in a pine box. Just throw me in the garbage. And I'm just like, okay. So what to expect when looking for a term policy or a whole life policy? Well, your agent is licensed by your state, and they have a fiduciary duty to do what's best for you. Whether they follow that or not is up to them, because there is some gray area. In other words, find an agent that is reputable, and probably I would find one that is referred to you from someone that you definitely trust. They're going to show you a term policy. They're going to show you a whole life policy. They can show you different riders that can get added to a policy. And you're going to look at the amount of coverage that you're going to want or potentially be able to afford. Medical questions and history checkup. Be honest in this section, because at least to the best of your ability, because if you are caught lying in your policy during this examination part and then they find out about it, they can void your policy. Medical examination is optional, and generally, if you know that you're in really, really good shape, it is better to get the medical, the exam done, just because you would get in a higher tier of rates, which means that you would pay less per month because you are healthier. And then after you get approved, there will be a final review of the policy, and then it will get funded. Excuse me. Term life. Term life is a set term, as in multiple years. So it could be 10, 20, 30, it could be 25, it could be 15, but that's the basics of them, of what you would get that for. If you die within the term, your beneficiary gets paid, whoever you name for that. And you are only paying for insurance, which means that you're paying the rock bottom lowest rates that you possibly can pay. And a lot of times term policies are used not only in the family setting, but also in the business setting. If you have a key person inside of a business, they could potentially put a term life policy on that person to cover the loss of their potential earnings if that person should pass away. And you might actually already have a term life policy on you provided through your employer. And you could go down to your HR and check out and see what type of policy that you have. And if you do, what the amount is on it. And generally, that term policy will expire if you leave the company for whatever reason. So that might influence what type of policy that you would get. But it's nice to know that you have it, yes or no. And if you do, then let your loved ones know as well. So the term pros and cons of having a term policy would be, well, you're going to get the absolute cheapest rates out there that you can possibly get because you're only paying for insurance. You've stripped down all the bells and whistles out of it, and you're only paying for insurance. It's generally used for income replacement or debt payoff. And the income replacement, the general rule of thumb is 10 to 12 years of earnings. So $50,000 times 10 years, you're going to look for a policy that has about $500,000 on it. Or let's say you have a house and it has $300,000 left on the mortgage, you would potentially get a policy for $300,000. And then if you kick the bucket, your house would get paid off, or your spouse would, whoever your beneficiaries, would pay off the house, and they would live in a house without a mortgage, which would be easing their financial burden. And with term, the quote that everybody likes to pitch is invest the rest, because for lack of a better term, with a whole life policy, if you took the money that you would be saving by getting a term policy and invested the rest in the stock market, with the stock market going up only, you would make more money than what you would do if you just bought a whole life policy. So the cons of it is that you could potentially be paying for nothing. That's great because you continue to live for another 10, 20, 30 years. That's awesome. But you could look back on it and like, oh, I just paid for nothing. I don't have anything, nothing to show after it expires. It can be very costly to renew. And the reason why I'm saying that is that if you bought your term policy when you were 20 years old and you got a 20-year policy and now you're 40 and it expired and you're like, well, I want another 20-year policy. Well, you're going to be based off of the 40-year table being of 40 years old versus 20 years old. And a 40-year-old pays more than a 20-year-old does. And it could be impossible to renew. You could have had a lot of health issues between when you signed that policy up until it expired, and you might not be insurable. Certain types of cancers or neurological issues or multiple heart attacks, types of medication that you're on could not void, but prohibit you from getting a new policy. Whole life policy. Whole life policy, well, it expires when you do. In other words, you get it for the entire entire life, and then when you die, the person that your beneficiary gets paid out. It does build cash value, and that cash value is something that you can borrow against. Your premium is broken down into your payment is 3 parts. So you got your premium there, and then the premium goes to pay for the death benefit, which is the same as what it would be for a term, and then it also goes to build the cash value up there. The cash value does grow over time, and you can borrow that money for whatever purposes you deem necessary. The pros and cons of having a whole life policy. Well, the pros are it's obviously it's for your whole life. You don't have to worry about it expiring. You can borrow the cash as needed, which is awesome, and you do not have to pay back that cash that you borrowed because it's your money. You just got to keep making the premium payments. That's important to know. And a lot of times you can add on riders down the road without additional medical exams or questions or physical exams at all. You can just add those on there, and I think it does add to the cost of it, but you are it's easier to manipulate this policy in your favor by paying a little bit more, and a term is just basically, it is what it is. Future health issues. Oh, well. And the reason why I'm saying that is when you sign up for this and you get cancer tomorrow, and then you have a heart attack the next day, and you have a neurological disorder the following day, and then you have everything else that could happen to you, well, that is absolutely terrible and that sucks. But your whole life policy is going to just stay in force no matter what. It is what it is. It doesn't expire. And you don't have to worry about a renewal period. Cons, it is way more pricey than a term policy. Cash value does grow slowly. It doesn't grow. It's not going to be exciting to watch this cash grow. So let's compare a term policy to a whole life policy and see if we can't figure out maybe which one is the right one for you in your situation. So a term policy, it's cheap, $7 a month, gives you X amount of coverage. To get the same coverage for a whole life policy, you're looking at paying about $100, and that is a huge, huge difference. Term policies, they pay within the term. That's it, though. Whole life policies, they're going to pay you no matter what. Term, there's a renewal, and it can be expensive and it can be impossible. Well, you don't have to renew a term policy. You know, you can just not have insurance after when it expires. You can do that too. But if you do decide to renew, it's expensive or it can be just literally impossible. And then a renewal period, it's not, there is no renewal period. It's just automatic. Like as long as you pay your premiums, it just automatic, you're good to go. Invest the rest. You're investing, you have an extra $93 to play with versus a whole life policy here. You can just invest the rest in the stock market or whatever you want to do, and you'll make money that way. Whole life policies, that $93 is going to just go to build the cash value, and unfortunately it will not build it that quickly. So what should you do? Well, the experts out there that I've watched, and I kind of shake my head at them because they love term policy, and they just say invest the rest. Like just get the term policy and just invest the rest in the stock market and you'll be fine. And I think what they're doing is they're coming from a one size fits all viewpoint, and that's not who that's just impossible. There's millions and there's billions of people around the world, and to say if term life was the only was the clear choice to pick, then whole life policy wouldn't even exist. Like no one would buy it at all. Like it would just be terrible. I say examine your situation. And here's some questions that maybe you should ask yourself. Do people depend on my income? 10 to 12 years worth. That's kind of the ballpark that you might want to get. Do I have a lot of debt that I need to pay off? If you do, then you might need to have a higher premium amount. Am I a savvy investor? And by that, do I mean like, can I take this extra money with my term life policy and invest it and do well with it versus I'm not really into the stock market. I really don't know what's going on with that. I really don't have any interest in it. I would rather see a guaranteed earning on my income versus versus going into the markets with it. And will I be prepared to go without insurance when I am older? Do I think that 30 years from now I'm going to be okay and I'll have enough money saved up for my funeral and paying, I won't have any debts, all that stuff will be paid off. Well, these are the questions that you kind of have to ask yourself. And what my takeaway was from this is, why does it have to be an either or scenario? Why can't you do both? My point that I'm trying to make here is that why couldn't a person get a term life policy for, say, let's just say $500,000 or $300,000, whatever. And they have it for 30 years. So they have it for long enough to get through most of their working years, having children, raising children, and then the children move out and they're on their own and they are full-fledged adults by then. And you're covering yourself and your family during your most crucial years that you are needed as a spouse, as a parent, and as a provider. You have the most debts then, you have the most people counting on you at that time. That would be for the term policy. Okay, but what if you got a whole life policy in addition to that? And I'm not saying a whole life policy at the same amount. What if you got a whole life policy that would just cover your final expenses, like a funeral for like $15,000, $20,000, whatever, so that when that term life policy does expire, you have a whole life policy that is a lot smaller with a smaller premium, obviously too, but you have the peace of mind knowing that you have some cash value there and your final expenses have been paid for when you die. Obviously, I'm not giving any suggestions out to anybody, but I want people to just really sit there and think. And when I was getting some takeaways from these so-called experts, they were just like term and that's it. And, whole life is garbage. Well, you really, really, really need to sit down with a financial advisor or an agent and talk an agent that really does care about your situation, not just their commission, and talk about your situation and really hash it out. So I hope this video has done that for you, and you have a better understanding of whole life policy and term policies, and maybe what you need to go out and do to make it set it up for your life the way that it needs to be. What do you guys think about this video? Did we answer all your questions? What stopped you in the past from reaching your financial goals? What types of videos would you like to see in the future? Please like, comment, subscribe. That really helps out the channel. And if you're on Facebook, check us out at 9 to 5ers. We have tons of free material there, and we're updating it on a constant basis. Thank you guys so much. We're here to make you smarter today and richer tomorrow. Have a good one.